What are we going to cover? We're going to cover, hey, what did properties sell for in terms of the average price per unit? What was the total sales volume in specific corridors of the areas of service that my team and I cover? When you take a look at the total stock, available properties in a particular area, how many of those buildings sold, right? It gives us an idea of the percentage, the turnover percentage of how active has the market been. And then of course, we're going to discuss rental rates. Hi, this is Chris German from The Apartment Dealer, and welcome back to The Apartment Dealer Show. Today, we're going to walk through our year-end 2022 market roundup. What occurred over the course of 2022 in terms of property values, property sales, total sales volume, rental rates, vacancy rates, and most importantly, what can that tell us as we embark on 2023? Now, the information, the data, the analytics that we're going to cover come from one of three specific sites. When it comes to the market analytics, sales, and so forth, that comes from CoStar Group. Now, CoStar Group is a third party, independent of myself, independent of the Apartment Dealer. And they're in the business of just that, market analytics. They are not involved in brokerage, sales of properties of any kind. And that's important because, as I've said before, they don't have a dog in the race. They're not trying to persuade multifamily investors to sell or to buy. They're just saying, look, here's what occurred. And they do this across the entire nation. So that's where we get the market analytics for. That's important because it's not Chris's opinion. Because sometimes if you've ever been to other, say, brokerage firms, market updates that they do kind of similar to this, then you sit there for an hour and they do go through some analytics, but they can be shaded when you depend on sales. And then they're just trying to hammer you on why it's time to sell and so forth. This is not that. We're reporting to you, hey, here's the real data. Now, when we transition over to rental rates, we use two different websites. Rent-A-Meter, which is, again, independent of myself. It's a third-party service that you can pay for as a consumer. And then you actually can search what are the rental rates in your area for 3 bedrooms, 2 bedrooms, etc. And then we also take a look at Zillow. Zillow has become of late the #1 platform to advertise your vacant rental units. So we take a look at Zillow to give us real-time data in terms of what are vacant rental units that are on the market now, what are landlords looking to collect, what's been collected in the weeks leading up to our presentation here. That's where we get the data from. Now, what are we going to cover? We're going to cover, hey, what did properties sell for in terms of the average price per unit? What was the total sales volume in specific corridors of the areas of service that my team and I cover? When you take a look at the total stock, available properties in a particular area, how many of those buildings sold, right? It gives us an idea of the percentage, the turnover percentage of how active has the market been. And then, of course, we're going to discuss rental rates. What are the current rental rates in your area? And then CoStar, what do they predict this year, 2023, when it comes to us being able to raise our rents and having to combat with any potential vacancies? Now, my team and I, between Los Angeles and San Bernardino counties, service 8 different corridors. Really, we kind of coined how these corridors are broken up. And the reason why we broke the cities into these 8 chunks, these 8 corridors, is because the values typically on average of the properties that are selling are about the same. Asking rents are about the same. The tenant base is about the same. So it gives us a way to, again, quarter off the individual corridors and then get an idea of, on average, what's taking place. So the first corridor, East Los Angeles, is going to be Boyle Heights, East Los Angeles, and El Sereno. The second corridor is the 710-91 corridor. This consists of Bell Gardens, Commerce, Cudahy, Huntington Park, Maywood, and Southgate. Our next corridor, the Pasadena Corridor, which is going to consist of Pasadena, Sierra Madre, South Pasadena, West San Gabriel Valley, Alhambra, Arcadia, Monterey Park, Rosemead, San Gabriel, Temple City, East San Gabriel Valley, Azusa, Baldwin Park, Covina, El Monte, Glendora, Laverne, Monrovia, South El Monte, West Covina. The 605 corridor consists of Bellflower, Downey, La Habra, La Mirada, La Puente, Lakewood, Montebello, Norwalk, Paramount, Pico, and Whittier, Pico Rivera, I should say. And that's what happens when you live or grew up in and around the area. Inland Empire West is Chino, Claremont, Montclair, Ontario, Pomona, Rancho Cucamonga, and Upland. And Inland Empire East is going to be Bloomington, Colton, Fontana, and Rialto. So you get a sense of painting at a larger map that my team and I essentially cover from the 710 freeway in LA County and head east all the way to about the 215 freeway. We as far north as the 210 and then as far south as about the 91. This is about our coverage area. Now, if you're watching this video on YouTube, you don't have to sit through each of the individual corridors if you're looking for a specific corridor because you own in a specific city. You'll see here along the bottom that YouTube puts a nice user bar here, and we are going to section it off in chapters or sections where the information you're looking for will be by corridor. That should make it easy for you, and you can skip along there. Okay, let's dig into East Los Angeles, the East Los Angeles corridor. In total sales volume, okay, if you took all the buildings that sold over the course of 2022, added those sales up, you'd come to 28,700,000. The average price per unit for the properties that did sell was $210,000 per unit. The average cap rate, again, cap rate being net income divided by price, said even easier. If you were to buy a building all cash, what would be your rate of return? Average cap rate, East LA corridor, 4.6% in 2022. Total sales was 20 sales, 20 properties, 5 units and above, 5 units to 50 units, because this is really the market that we track. Less than 5 units would be considered residential, 1 to 4 units. More than 50 units, now you're talking about institutional type stuff. So we track the market 5 to 50 units primarily. 20 sales of an entire stock that consisted of 690 buildings. There's 690 multifamily properties in this corridor that are between 5 to 50 units. Now our rents, what are the average rental rates? You can pause the video here, but to give you an idea how this functions, if you own in the city of Boyle Heights, the average rent today for a studio, $1,332. If you have a 1 bedroom available, $1,552, 2 bedroom, $2,053, 3 bedroom, $2,651. Now I realize if you post an ad for a vacant unit, you're not going to advertise the rental rate of $2,651. Again, these are averages, remember, between Rentometer and Zillow. If you take a look at the entire corridor, you have your averages there along the bottom. So the average in this corridor for a studio, $1,333. The average for a 1 bedroom, $1,560. 2 bedroom, $2,062. And the average for a 3 bedroom, $2,612. And of course, some buildings are getting less, some buildings are getting more. I have a property that I own in this corridor, just rented a 1 bedroom for $1,845. So you can get, again, depending on quality and the type of unit and so forth, of course, you can always get more. You watch our other videos, we always discuss how do you get above market rental rates. Now let's take a look at the highest sale in each of these individual cities. This is more so to give us an idea of what was the ceiling in 2022, not, hey, I own in this city too, that means my building's worth the same. No different than if I was saying, hey, let's take a look at the cheapest building that's sold in that city. You would never say, okay, that means my building is worth the same, right? This just gives us a general idea of the ceiling. And of course, there's many factors that come into evaluating a property's value. But in East Los Angeles, 90022, we had this 5 unit here that's sold on Ferguson, $1,475,000. That's $295,000 per unit. That is a hefty price for the East LA corridor. Moving over to El Sereno, the 6 unit on Winchester, final sales price $1,560,000, $260,000 per unit. That is a high price for that corridor. Now, when we take a look at the trend in rental rate growth and vacancies, okay, We're now leaning on CoStar for their data. If you take a look at here, they break up their corridors a little bit different. They lump some together that we separate. They separate some that we put together. But they really have the best analytics for this sort of thing when we're talking about rental rate growth, past and projected, as well as the vacancy. In the South Los Angeles corridor, as they call it, Southeast Los Angeles corridor, the vacancy rate in 2022 was 2.5%. They're projecting that the vacancy rate this year will be 2.5%. That's very important, meaning we're not going to see an upward trajectory of vacancy, right? Annual rent growth. Last year, 2022, we saw a growth of rental rates on average of 5.3%. This year, they're estimating that rents will continue to grow, and they'll grow at 2.3%. Now, don't be discouraged when you see 2.3 versus 5.3. Don't forget, we're coming off of historic gains in rental rates between 2021 and 2022. For as long as they've been tracking this now, I think it's over like 100 years of data. We saw the biggest gains in rental rates the previous 2 years. The gain that we look to see in this quarter this year is about average. 2 to 3% per year would be something closer to average, but that's stacked on top of the already historic historic level of rental rates that we have going into 2023. So what I'm saying is that's a good thing. That's not a negative. The 710-91 corridor. The total sales volume for this corridor in 2022, and how we calculate sales volume is, let's add up every building that's sold between 5 to 50 units, okay, multifamily, 5 to 50 units. What would be the total? The total for 2022 was $127 million. What was the average price per unit on those buildings that sold? It was $233,000 per unit. What was the average cap rate? Cap rate being net income divided by price, or said more simply, if you were to buy this a particular property all cash, what would be your expected rate of return? The average cap rate in this corridor was 4.2%. And of a total stock of available buildings that could sell, okay, so how many buildings are there in this corridor that are between 5 to 50 units? There's 2,467 properties. Of those, 58 actually changed hands over the course of 2022. Rental rates. You can pause the video here, find the city and the bedroom count that you're looking for, but so that you understand how this functions, let's say you own a building in the city of Cudahy and you have a studio unit. The average on the rental rates as of today is $1,422 for a studio, $1,616 for a one bedroom, $1,823 for a two bedroom, and $2,692 for a three bedroom. If you take a look at the average for the entire corridor, on average, studios are $1,307, one bedrooms are $1,547, two bedrooms are $1,878, three bedrooms are $2,644. I'm sure some of you are looking at these rental rates saying, gosh, there's a lot of room for me to increase my rents. That's a good thing, the upside opportunity that we want to take advantage of. Of course, many of you are saying that, hey, I get above the average than what we've listed here. And that's the idea. Remember, these are just averages. Many people are getting less, many are getting more. Myself, say in Maywood, where we have a property that we own, we get above the averages versus when I'm looking at this chart. So, of course, again, just to give you this is a point of reference, okay? Just so you have an idea what's going on with rental rates. The highest sales in each of the cities in this particular corridor. We take a look at the highest sale to give us an idea what was the ceiling over the course of the last year in terms of potential sale price. Now, we don't take a look at it to say, okay, well, this building, say in Bell Garden, sold for this price per unit. That means my building is worth X, right? That's not. Every building is different. The bedroom count's different. The income's different. Location's different. And that'd be no different than if I was saying, hey, let's look at the cheapest building that sold in 2022. You wouldn't then say, oh, well, that means my building's worth that price, right? Right. So again, just to give us an idea, a bird's eye view, if you will, of some of the sales that occurred last year. So in Bell Garden, 16 units on Garfield sold for $7,025,000. Price per unit, $439,000. That's a huge price for the city of Bell Gardens. That investor must have really liked that property. In the city of Bell, 11 units on Elizabeth sells for $4 million, $363,000 per unit. About what I would expect for this type of construction, size of the units and so forth, about to be expected. In the city of Cudahy, 6 units on Live Oak sells for $366,000. That's a big price tag for the city of Cudahy. In the city of Huntington Park, 6 units on Broadway sells for $251,000 per unit for a total price of $1,510,000. That's still a very aggressive price for the city of Huntington Park. And the city of Maywood, 8 units on King Avenue sells for $317,000 per unit for a total price of $2,225,000. Now, as we go through these sales prices and you consider the trajectory of multifamily property values in this corridor the last decade, what has it been? It's been upwards, even amidst COVID and all the rest. It's all good news for the 710-91 corridor. Moving on to Paramount, 8 units on Exeter sells for $293,000 per unit. Aggressive price there in Paramount. And in Southgate, 7 units on Cypress sells for $392,000, gives us a price of $2,750,000. That is a big whopping price for Southgate. Of course, not being involved in that sale myself, not knowing the intricacies, there had to have been something particularly special about that property to sell for that price per unit. As we transition to the rental growth rate and the rate at which we will look at vacancy over the course of 2023, we lean on CoStar for their data, but they break up the corridors a little bit different than we do. They put together some cities that we don't necessarily do, and they take apart some of the cities that we put together in our corridors, but we use their data because it is simply the best for when we're looking at these type of things in terms of, hey, what's happened with the vacancy rate? What's the projected vacancy rate? Same thing when it comes to the rental growth rate. In 2022, the vacancy rate that we saw in this corridor was 2.5%. In 2023, the expected vacancy rate, 2.5%. That means we're not going to see an increase in the vacancy rate. Now, let's take a look at annual rental growth rate. So in 2022, we saw rents grow by 5.3%. In 2023, we anticipate rents will grow at a rate of 2.3%. Now, don't get discouraged when you see it go from 5.3 to 2.3. You have to keep something very important in mind, that we are coming off of historic gains when it comes to rental rates. For as long as they've been tracking this, I think it's now about 100 years, between 2021 and 2022, and really being the catalyst being 2020, we have seen the biggest rise in rental rates than we've ever seen historically. So when you see that rental rates are going to grow by 2.3% this year, if you've done a good job raising your rents over the last few years, then that means that's stacked on top of what is already the very high rental rates. That's something to be very excited about. The Pasadena Corridor. Now, when we take a look at total sales volume, this being, if we take a look at every building that's sold in this corridor over the course of 2022, what would be the total dollar amount? That's $145 million for this particular corridor. The average price per unit that we saw over the course of 2022 was $366,000 per unit. The average cap rate being net income divided by price, or said more simply, if you were to buy a building all cash, what would be your expected rate of return? Average cap rate 3.7%, and the total stock available of buildings between 5 units and 50 units, which is what we really track, 5 to 50 unit properties. Total stock available, 1,634 buildings. Of those 1,634 buildings, 34 buildings sold. Now, our current rental rates, you can pause the video here, find your city and the bedroom count you're looking for. But to give you an idea how this functions, let's say you have a property in South Pasadena. The average asking rent on a studio, $1,735, a 1-bedroom, $2,008, 2-bedroom, $2,530, and a 3-bedroom, $3,225. And of course, you see across the bottom there, the averages for the corridor. Of course, some of you are collecting less than these amounts. Some of you are done a good job improving your units and what have you, and depending on the location, maybe getting well above. Keep in mind, these are just averages. Now, let's take a look at the highest sale in each of the cities within this particular corridor. We do this to give us an idea of, well, what was the ceiling over the course of the year. We don't take a look at this to say, okay, well, if this building sold for X, that means my building's worth X, right? Because again, every building's different between the income it collects, the total bedroom count, lot size, and all the rest. That differs. No different than if I was highlighting, let's take a look at the cheapest buildings that sold. You wouldn't say, oh, okay, that means my building's worth X, okay? This is just to give us a bird's eye view, some sales. In the city of Pasadena, this 5-unit on Oak Knoll sold for $2,580,000. That's $516,000 per unit. Big price per unit there. And in South Pasadena, this 8-unit on Huntington Drive sells for $585,000. If you can imagine, for a total price of $4,680,000. That seller, I'm sure, was excited about that one. When we move on to rental growth rate and vacancy rate, what happened over the course of 2022, and more importantly, what can we anticipate this year, 2023? We lean on CoStar for their data. They break up the corridors a little bit different than we do, but close enough, and the data is the best of what's available. That's why we utilize it the way they've chunked this down. But what they have is this. The vacancy rate in 2022 was 2.6%. The anticipated vacancy rate in 2023, 3.3%. So we're going to see an uptick in vacancy rate in this corridor. And that's no surprise because you're dealing with a tenant base that has the ability to buy single family homes. When I say has the ability, meaning, their financial means. And so when the market begins to shift, you always see an uptick in vacancy in this particular corridor first. Annual rental growth rate. Over the course of 2022, you saw a growth rate of 2.6%. Not all that much of a rental growth rate when we're comparing some of the other corridors that if you were to take a look at the other corridors on average, they saw over a 5% growth in rental growth rate. But nonetheless, tracking on average. And then the annual rental growth rate in 2023 is going to be 2%. Why? Because you're competing with a higher or an anticipated higher vacancy rate. And so things are shifting here in the Pasadena market. Have you subscribed to our direct email list? The video that you're currently watching, this video will go on YouTube and is available to the public. But there is a whole other segment of educational videos and interviews that we put together for those investors, multifamily investors that own within the corridors that we service, you being one of them. So be sure to subscribe to our direct email list so you receive those videos as well. And you'll get early access to our live events. When the registration opens, you'll be one of the first to know because every live event that we have, we get fully reserved. We pack the house and we don't want you to miss out on your opportunity to, if you like this content, to get it at a TEDx level and to be able to ask your questions of the real estate attorneys, tax consultants, market forecasters, lenders, and all the rest that we bring to our live events. We want you to be able to put forth your questions to them. And we want to serve you, help you with the ownership and management of your multifamily properties. So be sure to click the link below, subscribe to our email list, and we look forward to talking to you soon. Now, the Western San Gabriel corridor, total sales volume. If you were to add up all the buildings that are between 5 to 50 units, okay, multifamily properties that have 5 to 50 units, because that's really what we track, you add up all those sales, you get a grand total of $199 million. That is a lot of sales volume when we're comparing it to the other corridors that we track. The average price per unit, $378,000. Again, an aggressive value. The average cap rate, 3.2%. Cap rate being net income divided by price, or said more simply, if you were to buy a building all cash, what would be your expected rate of return? 3.2%. That is lower than I would say the average of many of the other corridors, meaning values trending higher. And then of the total available stock of properties, so how many total buildings are between 5 to 50 units in this corridor? There's 1,926, or at least what you can find on title. And of those, there was 47 sales. Current rental rates. What you can do is stop the video here, pause, find your city, the bedroom count that you're most interested in to give you an idea, but these are averages, okay? And so how this functions is, let's say you have a building in Rosemead. The average rental rate for a studio, $1,388. A one bedroom, $1,665. A two bedroom, $2,184. A three bedroom, $2,750. Now, if you go across the bottom, you'll see the averages for the entire corridor. Some of you may be getting less than what you see as the average, and so there's hope, right? You can raise your rental rates. Some of you may be getting above average. That means you've done a good job improving your properties and the type of tenant base and what have you. This is, again, just to give you an idea, frame of reference for the averages in the area. Now, when it comes to particular sales in each of the cities, we're going to highlight the highest sale in each city. This is more so to give us an idea of what was the ceiling in 2022, not to say every building in a particular city is worth this amount, right? No different than if I was highlighting the lowest sale value in a particular city. That wouldn't mean everything else was worth the same price. The buildings differ between the income they collect, the total bedroom count, lot size, rentable square feet. You get the idea. Okay. In Arcadia, highest sale, 2022, this 15 unit on Fairview sold for $570,000 per unit. Total price, $8,560,000. That is a big price tag on a per unit basis for Arcadia. In Rosemead, 5 units on Delta sells for $1,938,000 per unit. 5 units in the city of San Gabriel on Muscatel sells for $504,000 per unit. That is a big price tag. Must have been something ultra special there, or the buyer really liked that property. Just takes one seller, one buyer, right? When we look at the rental growth rate, what occurred over 2022 and what's anticipated for 2023, as well as vacancy rate, we use the data provided by CoStar. CoStar chunks down their corridors a little bit different. They leave out some cities that we would include in a corridor. They put some in that maybe we put in a different corridor, but you'll get an idea based upon where you own and what are the averages nearest to your buildings. The vacancy rate in 2022 was 3.5%, and the anticipated vacancy rate for 2023 is 3.4%. We're actually going to tick down slightly on vacancy. This is one of the few corridors that we actually anticipate vacancy to go down. Others, I would say the average is more so that we anticipate it to stay about the same. Annual rental growth rate. In 2022, there was a growth rate of 3.7%, and over the course of 2023, we anticipate the annual rental growth rate to be 1.7%. That's fairly low, but not all is negative, because remember, coming off of 2020 as the catalyst and then 2021 and 2022, we recorded the highest growth in rental rates that we had ever seen historically, and they've been tracking this for about the last 100 years. So given the fact that in 2021 and 2022, you had these historic gains in rental rates, you see 1.7 today, but again, not to be too negative, because that's 1.7%, but on top of the already high rental rate. So if you did a good job raising your rental rates and improving your properties over the course of the last few years, your rental rates are going to be in tip-top shape. The East San Gabriel Valley Corridor. Now, total sales volume. How do we calculate this? If you take every building, every property that's sold, multifamily, that was between a 5-unit property and a 50-unit property, right? Because that's what we track. Total of all those sales for 2022 was $159 million. A good year for sales in this corridor. The average price per unit, $266,000 per unit. Still aggressive pricing in the area. The average cap rate, 4.3%. Cap rate being net income divided by the purchase price, or said more simply, if you were to buy a building all cash, what would be your anticipated rate of return? Total sales in terms of the available stock. So in this particular corridor, again, multifamily properties that are between 5 to 50 units, there's 1,871 properties. Of those, there was 52 sales. Rental rates. Now you can pause the video here, find the city that you're interested in, go across, find the bedroom count. But to give you an idea of how this functions. So say for instance, the city of Covina. Studios, on average, 1,594. One bedrooms, 1,814. Two bedrooms, 2,313. Three bedrooms, 2,679. Now, if you go across the bottom, that'll give you the average for the entire corridor. So you get an idea of what's taking place in the market overall. Many of you may be collecting less than these rental rates when you look at the average. And so that's good news in the sense of there's hope, right, of the upside of your rental rates. Some of you may be much higher. I know that, we own in this particular corridor as well. We're getting, as I look at this chart, we're getting above the average. But again, that also takes into account, quality of a property, tenant base, location, and so forth. Now we're going to take a look at the highest sale in each of the cities within this corridor. We do that to give us an idea of what was the ceiling, if you will, over the course of 2022. We don't do it so that, say, if you own a building in a particular city and we look at a sale there, that means all the buildings are worth the same value. Of course not. Every building is different in terms of the income that's being collected, the total bedroom count, lot size, construction style, age, and what have you. You get the idea. But this is just to give us an idea of what occurred over the course of last year's sales, some of those to highlight. So we'll start with Azusa. Now, this 5-unit in the city of Azusa sells for $360,000 per unit, total price of $1.8 million, healthy price for the city of Azusa. This 30-unit in the city of West Covina sells for $300,000 per unit. Not extremely high unless you take into consideration the size of the property, 30 units. So $300,000 on a 30-unit building, healthy price for the city of West Covina. In Baldwin Park, 15 units on Vineland sells for $393,000 per unit. One thing to know about this property, though, is that they were individually mapped the units to be condos. So it was condo ready, if you will. That added the increased value. So $393,000 a door in Baldwin Park, big price. In Covina, 6 units on Aramlin sells for $2 million, about $333,000 per unit, a healthy price for the city of Covina. And then I represented the seller in this property, 6 units in El Monte on Roland, sold for $321,000 per unit, total price of $1,930,000. That was a big price in El Monte. And my client, the seller, sold that property to do a 1031 exchange. 6 unit sells here in the city of Glendora for $408,000. It's a big price tag for a property. That one was on Clara Day. A nice property, but nonetheless, you breach $400,000 per unit in Glendora. That's a big price tag. Monrovia, 12 units on Encinitas sells for $537,500. Big price tag for this property. Was newer construction. And when we say newer construction, anytime we're talking about something built in the 80s and the 90s, we say newer just because most of the inventory was built in the 40s, 50s, and 60s. But nonetheless, healthy price for that particular property. And then here in South El Monte, we actually represented the seller on this property. Highest sale for the city for the year. 12 units on Edwards, sells for $266,000 per unit, total price $3.2 million. And our client actually sold that property to do a 1031 exchange. Now, when we look at the anticipated rental growth rate as well as vacancy rate, we go back to CoStar and their analytics. But their corridor is a little bit different than ours. They leave out some cities that we would put in a particular corridor. They group together some cities that maybe necessarily we don't in our corridors, but nonetheless, it gives you an idea of the way they have their corridors closest to you, what occurred in 2022, what is forecasted for 2023. So vacancy rate in 2022 was 3.5%. Vacancy rate in 2023 is projected to be 3.4%. So we're actually going to see a downward trend in vacancy, which is great news for the owners there. With respect to annual rental growth rate, in 2022, we saw rents grow at a pace of 3.7%. And over the course of 2023, that's going to drop to a mild 1.7%. And that's low. We take a look at some of the other corridors that are anticipating at least above a 2% increase in rents. We're going to be below that here in the San Gabriel Valley corridor as they have it chunked down. But not all is negative. Keep in mind, with 2020 being the catalyst, and then over the course of 2021 and 2022, we saw the highest growth in rental rates than we've ever seen for as long as they've been tracking this for about the last 100 years. So when you're coming off of historic rental rates, even if you can only raise your rents, or even if rents only grow, say, by 1.7%, that's stacked on top of the already high historic rental rates. But keep in mind, going back to our rental rate slides, many of you haven't raised your rents over the course of the last year. I don't know why, because it is safe to do so. And in LA County, you could raise your rents as much as 10%, 5% plus the change in CPI. Come this April, they're going to get a new readout in CPI, and it may not be that high. You may not be able to take advantage of 10%. We don't know yet. So a word to the wise, if you haven't raised your rents, get on the ball. Keep in mind, given rent control and all the rest, and your property values are tied to the income, you want the rental rates on the higher end of the spectrum. The 605 corridor. Now, total sales volume. How we calculate this is if you take every property that's between 5 to 50 units, because that's really what we track, 5 to 50 unit properties. If you add up all the sales that occurred over the course of 2022, that would give you 177 million. The average price per unit, 260,000, and the average cap rate, 4.1%. Average cap rate being net income divided by price, or said more easily, if you were to buy a building all cash, what would be your anticipated rate of return? 4.1% here in this corridor. And then total stock available of properties, multifamily properties, again, that are between 5 to 50 units. There's 3,225 properties within that size range. Of those, there was 71 sales over the course of 2022. Rental rates. You can pause the video here, find the city that you're most interested in, and then go across, find the bedroom count, and that'll give you the current average asking rental rate. So, for example, in La Puente, if you had a studio, the average rental rate right now is $1,395. One bedroom, $1,680. Two bedroom, $1,892. And a three bedroom, $2,623. If you go across the bottom there, it gives you an idea of the average for the entire corridor per bedroom count. And for many of you, maybe looking at these rental rates, you're on the lower end of the spectrum. That's good, right? You can raise your rents. There's hope for upside. Some of you may be above these asking rental rates, which is good. That means you've done a good job improving the property, tenant base, and what have you. This is just an average for the area. We're going to highlight the highest sale in each of the individual cities within this corridor to give us an idea what was the ceiling in terms of value over the course of 2022. Give us a bird's eye view of some of the notable transactions in the area. What this doesn't tell you is, okay, a property sold in this particular city for this price per unit, that means my building is worth X. Because every building is different, given the age it was built, total units, bedroom count, total size of the building, lot size, construction style, age, on and on. It'd be no different than if I said, let's highlight the cheapest sale in each of the cities, and to tell you that meant what your building is worth, right? They're not correlated. Okay, so again, bird's eye view, just some notable sales. First up, 5 units in the city of Bellflower on Cedar sells for $2.5 million, $500,000 per unit. That is a big price tag for the city of Bellflower. In the city of Downey, 28 units on Elm sells for $435,000 per unit, $12.2 million. It's a big price tag. Anytime you breach $400,000 here lately, that's a big price tag. La Habra, 7 units, sells for $1,927,200 per unit. This property over on Idaho. Big price tag for that particular property. La Puente, 7 units on Larimore, sells for $286,000 per unit. Aggressive price for the area. Lakewood, 9 units, sells for $436,000 per unit. Total price of $3,930,000 over on Pioneer. As you can tell, newer constructed property, looks like pride of ownership, right? But and owner was able to fetch higher end of the spectrum in terms of value. And then my team and I were involved in this transaction here. Sold this property, 6 units in the city of Montebello, on Beverly Boulevard sold for $333,000 per unit. That's a hefty price tag for the city of Montebello. And then to Norwalk, 46 units on Imperial sells for $306,000 per unit, total price tag of $14,100,000. And keeping in mind the size of the building, 46 units, over $300,000 per unit. That's a hefty price for that particular property. And then Pico Rivera, 8 units on Birch Bark sells for $312,000, total price of $2.5 million. Aggressive price for that city. Whittier, 5 units on Comstock sells for $350,000 per unit. Hefty price even for Whittier. And then there was additional property one to highlight in Whittier. 7 units sold for $397,000 per unit. Not very characteristic in terms of values in Whittier, but this property did sell over on Newland over the course of 2022. We're going to discuss projected rental growth rate as well as vacancy rate. And we turn to CoStar for their analytics because they are the best at what they do. When it comes to their corridors, they're a little different than ours. They leave out some cities that we would include. They include some cities that necessarily we don't include in a particular corridor. But this gives you an idea, depending on where you own, what's taking place closest to your area of interest. So vacancy rate. Over the course of 2022, the vacancy rate was 3.5%. Over the course of 2023, they are estimating it's going to be 3.4%. We're actually going to tick down when it comes to vacancy rate. Annual rental growth rate over the course of 2022 was 3.7%. And over the course of 2023, it's going to be 1.7%. Not as exciting as 3.7%, but not all is negative. Remember, starting with 2020 as the catalyst, and then over 2021 and 2022, we saw the biggest increase in rental rates that we ever had seen historically, and they've been tracking rental growth rate for about the last 100 years or so. So even though we're going to see a modest increase of 1.7% in overall rental growth rate, that's stacked on top of the already historic rental rates. So again, be excited. Rental rates are still on the upward trajectory, and that's a positive. The Inland Empire West. Now, if we take a look at total sales volume, if you tally up every property that sold over the course of 2022, and those multifamily properties that are between 5 to 50 units, the total sales volume was $80,300,000. Price per unit. The average price per unit was $245,000 per unit. The average cap rate was 4.2%. And average cap rate being net income divided by price, or said more simply, if you were to buy a building all cash, what would be your anticipated rate of return? 4.2%. And then the total stock available in the Inland Empire West, multifamily properties, 5 to 50 units, you have a total of 1,123 properties. Of those, 38 of them sold over the course of 2022. Now, rental rates. These are the average current asking rental rates. You can pause the video here, find your city of interest, go across, find the bedroom count. But to give you an idea of how this functions, so say the city of Pomona, the average rental rate for a studio, $1,585. For a 1-bedroom, $1,751, 2-bedroom, $2,115, and a 3-bedroom, $2,587. If you go across the bottom, that's the average asking rate for that bedroom count for the entire corridor. And this gives you some sense of how are your rental rates stacking up with respect to the average. Some of you might be quite low, and that gives you hope, right? Because there's room to raise your rents, unless like cities like Pomona now that are dreaming up their own rent control, you cannot raise your rent as much as all your other neighboring cities. Well, that's not true because Claremont now has dreamed up their own version of rent control and limiting these type of things. But again, rental rates in terms of what's available from your current rates to average. Some of you may be collecting above average, well above average, and that means you've done a good job increasing rents, improving the property and so forth. But we wanted to give you this baseline. Now we want to highlight the highest sale in each of the cities in this corridor over the course of 2022. This gives us an idea of the ceiling value in a particular city over the course of the last year, and gives us a bird's eye view of notable transactions that occurred in this particular area. What this is not to do is try to help us identify, well, what's the value of all the properties in a particular city? Of course, every building is different. Construction style, number of units, total bedroom count, the income a particular property collects, they're all different. This is more so bird's eye view. In the city of Claremont, I actually represented the seller on this particular property. 16 units sells for $5.3 million. This was over on Baylor, a great property. Sold for $331,250 per unit for a total price $5.3 million. Again, 16 units in the city of Claremont, and our client sold that to do a 1031 exchange. 12 units in the city of Montclair sells for $360,000 per unit, total price $4,321,500 on Mandera. You can see all single-story construction. Typically, properties that are all single-story construction do fetch a higher price per unit, but nonetheless, that was still an aggressive price for the city of Montclair. 30 units in the city of Ontario on Flora sells for $267,000 per unit, $8,010,000. And given the size of the property, 30 units, you think about $267,000 a door. That was an aggressive price for the area. And then in the city of Pomona, 10 units on Kingsley sells for $250,000 per unit, total price of $2.5 million, aggressive price for the area. Now, moving on to rental growth rate and vacancy rate. What occurred over the course of 2022 and what is projected for 2023? And we lean on CoStar for their analytics because they are the best, but their corridors might be shaped a little bit different, meaning they bring in some cities that maybe we don't include in our corridors, leave out others that we might have included, but it's the closest corridor to where you own to give you an idea of what's going on with the trajectory of vacancy rate and rental rates. So vacancy rate, in 2022, the average vacancy rate was 6.1%. Now, you may remember, you watch our previous videos, in 2021, we had a lower vacancy rate because people were moving east as they were told by their employers that you can work from home. They're looking for affordability. People moved from the west to the east. That brought down the vacancy. Now they're being told, get back to work. The office is open. And so now you have vacancy ticking up. And so we also see that in 2023, vacancy in this particular corridor will continue to increase to 7% on average. Now, our annual rental growth rate. So over the course of 2022, rents actually receded somewhat, 0.3%. Now, there's a margin of error there and depends on what city you're talking about. So let's say rental rates stayed about even. That's not bad considering with 2020 being the catalyst and then over the course of 2021 headed into 2022 that we saw the highest increase of rental rate that we had ever saw over the course of the last 100 years for as long as they've been tracking rental growth rate. So to stay at par, not bad at all. And now we see in 2023, we're going to continue pushing forward with rental rates growing at a 3.2%, which is more of an average that you would look to see. But keep in mind, that 3.2 is stacked on top of the already historic high rental rates that we're working with. Now, the Inland Empire East, if you take a look at total sales volume, transaction volume, over the course of 2022, if you add up all the properties that sold that were between 5 to 50 units, because that's what we track, total sales volume for the year, $26,300,000. The average price per unit, $210,000. And that's very aggressive, especially in this corridor to see things on average being above the $200,000 mark. And then the average cap rate, 4.4%. And cap rate being net income divided by purchase price. Or said differently, if you bought a building all cash, what would be your anticipated rate of return? 4.4% here. Of the total available stock, so in this corridor, multifamily properties that are between 5 to 50 units, there's a whopping 287 of them. And I say whopping because when you look at some of the other corridors we work, there's 2,000 and 3,000 multifamily properties. But of the 287 that are available for purchase, 14 of them sold. Now, rental rates. You can pause the video here, find your city of interest, go across, find the bedroom count. But to give you an idea of how this functions, in Fontana, a studio on average, asking rent, $1,217. 1 bedroom, $1,502. 2 bedroom, $1,820. And 3 bedrooms, $2,411. You go across the bottom, that's the average for the entire corridor per bedroom count. So this gives you an idea as you take a look at your rental rates, how close are you to the average? Some of you may be well below the average, and that means there's a lot of hope, right? There's room for you to increase rent. Some of you may be above the average, and that's great. That means you've stayed on top of your rental increases, you've improved your properties, you've got the right tenant base going. And so again, this gives you an idea of a baseline of where rental rates are. Now we want to take a look at the highest sale in each of the individual cities over the course of 2022, the highest sale being price per unit. This gives us a bird's eye view. What are the notable transactions for the year? What was the ceiling in terms of value over the course of the last year? It is not to tell us, okay, if a particular building sold in a particular city for a particular price, that means all the properties are worth the same value. Couldn't be farther from the truth. Why? Every property is different. Number of units, the age it was built, the construction style, property improvements, total bedroom count, the income that it collects, right? So they're all different. This is bird's eye view. 6 units in the city of Colton sells for $1,350,000, $225,000 per unit. That property was on D Street. That is a high price per unit, considering that's Colton. 36 units in the city of Fontana over on Arrow sells for $326,000 per unit for a total $11,750,000. Big price for the city of Fontana. And in Rialto, 15 units on Riverside Avenue sells for $262,000 per unit. Total price, $3,936,500. An aggressive price when we take into consideration this is the city of Rialto. Now, moving on to rental growth rate and vacancy rate. What occurred over the course of 2022 and what is projected for 2023? And we lean on CoStar for their analytics because they are the best, but their corridors might be shaped a little bit different, meaning they bring in some cities that maybe we don't include in our corridors, leave out others that we might have included, but it's the closest corridor to where you own to give you an idea of what's going on with the trajectory of vacancy rate and rental rates. Vacancy rate over the course of 2022 was 3.4%, projected in 2023 to move up to 4.7%. No surprise as people begin to move west, closer to jobs as they're told that they have to return to the office and so forth. The annual rental growth rate over the course of 2022 was 5.1%, and over the course of 2023 is projected to recede to 1.7%. But not all is negative. Please keep in mind that starting with 2020 as the catalyst, then through 2021, on through 2022. That is the biggest leap that we've ever seen as long as they've been recording a rental growth rate. I think it's over 100 years now. The biggest growth that we've seen in rental rates. So even though we may see only a 1% on average growth in rental rates this year, so the rental rates are tracking in a positive direction. That's all good news for landlords in the area. So what does this all mean to you? Well, it depends on what is your overarching goal of owning multifamily properties. Your properties, my properties, are a means to an end. In other words, simply they're sticks, bricks, and nails. You own one location, I own another. But we own multifamily property because we want to, now this is your turn to fill in the blank. For most people, they would say it's because I'm looking for cash flow. I'm looking for something, a tax shelter, tax savings. I'm looking for my wealth to grow. I'm looking for appreciation. Those are the top 3: cash flow, appreciation, tax savings. That's why investors would own multifamily properties. So my question to you then is, whatever is your main objective, why not get more of the good stuff? For the same amount of time, energy, risk, especially with all the legislation, right? That's involved in being a multifamily investor. If cash flow is your means to an end, that's your main motivator, that's why you manage multifamily properties, then is there a path for greater cash flow? If you're looking for your overall wealth to grow for you and for your heirs, well, is there a strategy which you could utilize to increase your portfolio size, which then only adds to your overall wealth, the appreciation of the capital that you initially started with. And of course, as you contemplate 1031 exchanges and transitioning to new properties, then there's additional tax savings because there's newfound depreciation to write off property improvements and so forth. So it's a simple equation of, if we could have more of the good stuff of why you and I own multifamily properties to begin with, then what is the strategy to get us there? Now, to know what your options are, to know what is the best strategy to get you from point A to point B, that takes an analysis. And that is much of the work that we do here at the Apartment Dealer. As you know, we do a lot of landlord education, and what you're seeing on video is much of what, if I'm sitting one-to-one with a client, we're discussing the dynamics of the market they own. What's their rate of return? How much equity do they have? What's their rate of return on equity? And if we were to put that equity to work, what could that mean? How much growth could they see? Could they see any growth at all? Could they see exponential growth? For others that are looking to exit multifamily altogether, they're at a point where they're ready to write off into the sunset. Okay, well, when you're looking at capital gains tax and all the rest, what are different avenues to mitigate that tax? If we're considering, how do we set our heirs up to win, right? How do we put them in a better position? If they're going to need more money in their lifetime to create the same standard of living that you've been able to enjoy, especially at the rate of which the cost of things is going, well, then what transitions can you do currently as you own the portfolio, as you own the property or properties, that would set them up to win, put them in a better position? That takes an analysis. That's something that we're happy to help you with, assuming you own within the corridors that we service, of course. This is where you and I get to see in black and white, what does the math tell us? Our emotions might tell us something else, right? Because after owning a property a while, you get to know the tenants, you've done a lot of improvements, you're really just proud of a particular property. Maybe you inherited a property, so there's years of family equity, blood, sweat, and tears in a particular property. And I totally validate all that, understand that, and that's the emotional component that would go into a decision. But when we're looking at it objectively, what does the math tell us? What is the best option for you to get whatever you filled in the blank earlier? We'd be happy to assist you with analysis. Please reach out to our office, and to get a better picture of, hey, we went over average price per unit, average, the sales volume, and a lot of, on average, what was going. But what if, can we get more granular? Well, we get very granular at our live educational events. And our next educational event is coming up here soon in spring. And so again, assuming you own multifamily property within the corridors that we service, we extended an invite to you to attend. The reservations are not yet open, so please don't contact our office to try to reserve a seat yet. Now's not the time. But that's where we bring together real estate attorneys, tax consultants, commercial lenders, 1031 exchange specialists, and all the rest. Begin with talking about the dynamics of the market, what's going on in the market, and then, okay, based upon your strategy, well, what are the legal implications, the financial implications, and all the rest? That's what occurs at our live event. And then if you have questions that are on your mind that you would want to put forth to the various speakers that we invite to speak, that's your opportunity to get your question answered. All on my dime. I like to buy you essentially an hour of these gentlemen's time, an hour of my time, here at this event. And that's what we do at our live educational events. Until then, stay glued to our YouTube channel. Be sure to subscribe to our channel so that you're getting the alerts as we release the videos over the course of this year. Give this video a like, give it a thumbs up here. That helps us get this content in front of other landlords and to assist them in the ownership and management of their properties. Share a comment below. What information did you find most valuable? What's your strategy for 2023? What questions could we answer that would be most helpful to you? Please share it in the comments below. And until we speak again, this is Chris German from the Apartment Dealer, wishing you positive cash flow, tenants who behave, and much protection from Uncle Sam. Till next time.